In this lesson, we are going to have a look at the cash flow budget, and I'm doing sample assignment 2, question 3, cost and management accounting as we find it in the ICB. So let me kill my video, share my screen, and show you how this question looks. Okay, so the cash budget. They say the budgeted cash-related transactions of ABC for May, June, and July 2022 are as follows. So this is our period, May, June, and July 2022. Let's pretend that we have a highlighter again, and I'm just highlighting everything that I see as important. Budgeted sales amount to 750,000 for the quarter. So the first item that I'm going to have in my cash budget is sales. Okay, it amounts to 750,000 for the quarter. 45% of this will be sold during May, 30% during June, and the rest during July. So 100% minus 45% leaves me with 55%, and 55% minus 30% leaves me with 25%. So they might have well have said to me, and 25% during July, but they say the rest. Want to see if we can do basic calculations. 60% of the sales are expected to be made on credit, and debtors usually pay as follows. Well, if 60% of the sales are going to be on credit, then 40% is going to be on cash. Now, when they talk about the credit sales only, we know that 50% is going to be paid in the month following the sales, 25% in the second month following the sales, 10% in the third month following the sales, and 15% will be written off. Okay. Now, the 15% that's written off, it's not going to reflect in our budget at all. So we can actually ignore that. Okay, so we are going to only work on the 50, the 25, and the 10%. We also know that some of our sales are on credit and some is on cash. Okay, that's good. Purchases for the quarter is expected to amount to 468,750. So the next thing that we're going to have on this statement looks like it is purchases. Okay. Interesting sentence that follow. They say, assume that opening and closing inventories are maintained at the same level and that a constant markup percentage is maintained throughout. That is our assumption. But now look, they do not tell us what that constant markup is. So it is something that we will have to calculate later before we can actually see what our purchases are in the different months. Keep that in mind. 60% of all purchases are made on credit. Obviously, that means again that 40% of all purchases are made for cash, while creditors are paid in the month following the month in which the purchases were made. So we have 1 month to pay, and we need to pay within that month. We don't have 90 days like we give our clients. Then it says sales personnel receive a commission. This is a spent item that we're going to have of 10% on all sales. Office personnel receive salaries of 8,523 per month. There are 5 of them. So we know that when we calculate the salaries, we will have to multiply this amount with 5. A new laptop with a higher purchase price of 38,000 something will be purchased on the 1st of June. A deposit. Okay, so we're going to have a deposit on the laptop. That's the next item. Must be paid on the 1st of June, 10%. And the balance, the other 90%, in other words, must be paid in 12 equal monthly installments starting on 31 July. So we had a deposit, and then we are going to have another item there that talks about installments. There's income tax that is due, and it amounts to 17,045 Rand. That will be paid during July. Dividends of 12,784 was declared on 24 April, but we're going to pay it in May. Then we are sitting with the following balances that appear on the books, the bank, the debtors and the creditors, and then they give us the credit sales for some of our previous months. Now that makes sense because we will only receive some of the sales that we made in February. We're only going to receive it in March, some in April, some only in May, and May is part of our period. Okay, that is why we have that. Okay, it looks like we have all the information here that we are going to need. Good. Then they say prepare the monthly cash budget for May, June, and July. Okay, so now let's have a look at how we do it. Okay, first thing that we will do is let's look at everything that is supposed to be in this cash budget. Okay, first thing is our opening balance. They give us an opening balance. And that opening balance, if you go and look there again, favorable bank balance of 397,727. That is what we start with. Can't fill in anything there yet. We don't know what it is. Okay. Then the first item that we saw was sales, but we know that we have to distinguish between cash sales and credit sales. The money that's actually coming into our account, and then the opening balance together with the cash sales and the credit sales that we are collecting from previous months will actually give us the total cash available. Okay, then we have payments. We have to make sure that we do not leave anything out. Firstly, there was our cash purchases and there was our credit purchases. Okay, there was the sales commission, the salaries. Then there was the income tax that we had to pay. We had to pay the laptop deposit, the installment on the laptop, the dividends, and these are all the payments that we were told that needs to be paid over this quarter. And then that'll give us the total payments. And if I have my total cash available and I have my total payments, then I can calculate my closing cash balance. And every time I close my cash balance in a month, that will also be my opening cash balance. Okay. But now before we can do anything, there's a couple of calculations that I need to do here on the side. So that before we can fill in anything there. And the first thing we're going to look at is our quarter sales. Now they have told us that the total sales for the quarter is 750,000. And we know that some of those sales will be on credit. I didn't put that in. Okay. And some of those sales will be on cash. Okay. Cash. Now, what did they tell us? They said that we are working on 3 months here, May, June, and July. And we know that the credit sales, if we go back here, we are told that 60% of sales are expected to be made on credit. So we're going to use that 60% there. Now, what did I do here? Why do I have 45% here? Something that I have to change. I think I was testing something else. Not a problem. We're just going to change it quickly. So it says that 60% of our sales, which is just 0.6%, is on credit. Okay. Oh no, I see what I did here. I messed up a little bit. Let me just make sure that I actually do not change it. Okay, so this is not my credit entry. This is my commission, And this is my credit sales, that would be the rest. Okay, so let's just have a look at it. Sorry about that. So what we are told is that when we look at this total sales, 40% will be sold in May, 30% in June, and the rest in July. I already explained that. So that 45% there, it amounts to 337,500. The 30% there amounts to 225,000, and the rest, now there's two ways to calculate the rest. We can just say it is that amount times 25%, or we can say, well, it is the full amount minus what we sell in May and minus what we sell in June, which is what I did here. So that is the rest. So now we have all our sales, our total sales for each month. And what I know is that of this, 40% rather is in cash. So I can take those amounts, I can multiply it with 0.4, and I get my cash. There's also something else that is based on our sales, and that's the sales commission. Okay, and we are told, just want to show you here, that when we look at the sales commission, it tells us that they get 10% on all sales, regardless of when we actually collect them. So 10% of 337 would just be 33,000 something. Every time we can just multiply the total sales with 0.1, and that will give us our commission that we need to pay to our salespeople. Now, what about our credit sales? Okay, now remember, if you go and look here, they told us what the credit sales were for February, March, and April as well, not just in this quarter. So we have credit sales for February, we have credit sales in March, credit sales in April, and then the period that we are looking at, May, June, July. In all these cases, we have credit sales. Good. And the credit sales amounts that we have for February, it was given. For March, it was given. And for April, it was given. For May, June, and July, once again, two ways to do it. It will simply be the difference between those amounts, or it will be the, I think that's what I did there. Yes, it's just the difference between these amounts. So if I have a total and I subtract the cash, then I end up with my credit sales. Another way to do it would be to multiply with 0.6, because 60% is on credit. Okay, now what do they tell us? They say that some of the people pay within 30 days, some pay within 60 days, some pay within 90 days, and then there is a percentage, 15%, that we are not going to recover. And I said to you, there's nothing we can do about it. It will not reflect in our cash budget because we will not recover it. And when we look at the 30 days, let me just go back here, we see that that is 50% of people. So 50, 25, 10. So those are the percentages that I have to use. So when I look at my February sales, 50% of those people had to pay in March. It's not going to reflect in this period. 25% paid within 60 days, in other words, paid in April. And 10% is only paying in May, which is the period that we are looking at here. So there is a cash flow of 11,000 that's going to come in from February sales somewhere here in May. Okay, same for March. So March, 50% in 30 days, 25% in 60 days, 10% in 90 days. So now for March, this will be April, May, June. So there's two amounts that's still going to come in from our March sales. In April, we have our 30, our 60, and our 90-day sales. Okay. Then with May, we do the same thing with April, we do the same thing. 50% of people is going to pay within 30 days. 25% is going to pay within 60 days. 10% is going to pay within 90 days. And the same for July. Now, of course, it means that in our cash flow, none of the July sales are going to reflect because these are only due in August, September, and October. So now let's break this down so that we can see exactly what is received when. So I just copy those months there and then I say, okay, in March, there is an amount of 58,000, that 30 days there. In April, I'm going to receive that 29,000 there. And in May, I'm going to receive that 11,000 Rand there. Okay, in March, in April, I'm going to receive some of the March sales, that 35,000 there. In May, I'm going to receive some of the March sales. Okay, it will be that 17,000 there. And in June, I'm going to receive that 7,000 from the March sales. But only May, June is in our reporting period. April, all the April sales are reflecting in our reporting period. 46,000 in May, 23,000 in June, and 9,300 in July. May, we will 50% of those sales will reflect in, we'll be able to collect rather in June, and 25 in July. And then when we look at June, we will be able to collect 50% of the sales in July. Okay, nothing in our July we have to do. We don't have to look at it because it's outside the, when we receive it, the money, it will be outside of our reporting period. Now, what we did here, remember, is we distinguished between cash sales and credit sales. Now, the cash sales is not a problem because look there, we calculated the cash sales there. So we can simply put the cash sales in here now. Okay, because there we calculated it. You see, we did that. But when it comes to the credit sales, we have to total all the amounts that's coming in from previous sales so that we can see what is the total amount that we are going to get in these months from our credit sales. Okay. I'm not filling that in yet. I will, or did I? No, I did. That's fine. Let's just put all of that in there. That's our credit sales. Okay. Now that I've totaled it, I can put it in. And now I know what cash available I have, but only for May, because I don't have the opening balances for June and July. So I can complete that now by saying it is the 397 plus the 135 in cash sales plus the 76,000 credit sales that I am collecting. Okay, good. So far, so good with regard to our sales. Now we get to our purchases. We are told that our total purchases for the period is 468,750. Okay. Now, we are also told that our inventory level stays constant and that we have a constant markup. So really, the thing that we want to use to calculate what our purchases will be is cost of sales, but we don't have our cost of sales percentage. But what do we have? We have our total sales for the period and our total cost of sales for the period. So if I go here and I say, let me take my cost of sales and divide it with my sales, then I see that my cost of sales is 62.5% of my sales. So then if I look at my different months here, I can say, well, if my sales in May was 337,500, my purchases for May will be that multiply by 62.5%. Okay, and then we can do the same for June. We can do the same for July. Now that is our total purchases. Now, once again, some of those purchases are for cash and some of it is for credit. Let's go and look again. It says that 60% of purchases are on credit, so we know that 40% will be on cash. So 40% is there, and then the difference between the amounts in the credit column or multiplying it by 0.6, both will give you the same answer. Okay, so now we know that. What do we further know about the period? Well, we know that there were still purchases that we had to pay for. In fact, 60% of the purchases that we made in April, we have to pay for in May. We have to pay all our May purchases in June and all our June purchases in July. Because it's always just a 60%, we don't have to worry about our about totaling it. We don't need to total it because there's only the three amounts. Okay, now that we have that, we can put it in here. So our cash purchases for May is 84,000. Our cash purchases for June will be that 56,000. And our cash purchases for July would be that 84,000 there. Credit purchases will be the amounts that we identified in this column here, the 117 in May, the 126 in June, and the 84,000 in July. Okay. By the way, where did I get this 117,000 for May? Well, let me just go and show you again. We are told here that our creditors for April, at the end of April, was that amount. Okay. And remember, we pay the next month. So that is where I got that 117,000 from. Good. Let's have a look at our sales commission. Well, we already calculated it there, so we can just put those values in. Our salaries, what we were told about our salaries, we were told that we pay 8,523 to 5 people, so we must multiply that with 5, and that salary bill stays constant for our budgeting purposes. We are told that we need to pay income tax in July, so there's nothing going to show in May and June. We know that we paid 10% deposit on that laptop in June, and at the end of July, it's still July, we start paying the installments. So the 90% that's left, that's why I multiplied with 0.9 there, divided by the 12 months that we have to pay it. And then in April, we declare dividends that we are only paying in May. Okay, and now I've accounted for everything that needs to be in here. I have my total cash available there. And now if I total everything under payments, and I have my total cash available and my total payments, my closing balance will be the difference between the two. Okay. If that is my closing balance at the end of the month, that is my opening balance at the beginning of the month. Okay. Now I can add my cash available here because I have an opening balance. I can total my payments for the month, and if I subtract my payments from the total cash available, I get my closing balance for for June. And then in July, whatever I end off in June becomes my opening balance, for July. Because I have that now, I can calculate the total cash available. I can total my payments, and then I can see how much cash do I have available at the end of the quarter. Now, in the real world, it might be a little concerning because it is coming down. The total cash available is coming down slightly, but there were some ad hoc payments like the laptop deposit, the dividends here, and the income tax there. So maybe it's not too much to worry about. And that is how you do the cash flow statement. Thank you. So let me stop my sharing here. And there's only one question to go now in sample assignment 2. So next time we will look at question 4. Thank you.